Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 24th, 2025, and we're diving into SEI's second quarter 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. SEI has delivered a robust performance this quarter, and I'm excited to break down the numbers and strategic moves with you.
Revenue and profitability overview. Let's start with the top line. SEI reported a revenue of $559.6 million for Q2 2025, marking an 8% increase from the previous year. John, what are the key drivers behind this growth?
SEI's revenue growth is primarily driven by strong performance across its core business segments, particularly in investment managers and investment advisors. The company has also benefited from a $94.4 million gain on the sale of its family office services business, which significantly boosted net income by 63%.
And how about profitability?
Operating income rose by 9% to $148.6 million, with an operating margin of 27%. This improvement is a result of increased efficiency and strategic investments in technology and talent, which are expected to support future growth.
EPS performance and analyst expectations. SEI's adjusted earnings per share came in at $1.78, a 70% increase from last year. This is significantly higher than the analyst forecast of $1.18. John, what contributed to this impressive EPS performance?
The EPS beat was largely due to a 60-cent benefit from the sale of the family office services business and a settlement gain. These one-time items significantly impacted the comparability of EPS against prior quarters, leading to a substantial increase.
How should investors interpret this EPS beat?
While the EPS beat is impressive, it's important for investors to consider the one-time nature of these gains. The underlying business performance remains strong, but future EPS growth will depend on sustained operational improvements and strategic investments.
Strategic initiatives and investments. SEI has been active on the strategic front with notable investments and board additions. Can you elaborate on these initiatives, John?
Absolutely. SEI's acquisition of Stratos Wealth Holdings is a strategic move to enhance its wealth management solutions. Additionally, the appointment of two new independent directors, Karen Risey and Tom Naratil, brings valuable expertise to the board. SEI is also focusing on talent and technology investments to support its growth ambitions.
And what about their share repurchase program?
SEI repurchased 2.2 million shares for $180.8 million during the quarter, reflecting their commitment to returning value to shareholders. This move is part of a broader strategy to optimize capital allocation and enhance shareholder returns.
Business segment performance. Let's delve into the performance of SEI's business segments. How did each segment fare this quarter?
The investment managers segment saw an 8% revenue increase, driven by a balanced mix of wins across alternatives and traditional investment managers. Private banks also grew by 7%, benefiting from new client implementations. Investment advisors experienced a robust 14% growth thanks to their integrated cash program. However, institutional investors faced a 3% decline in revenue due to market volatility.
And what does this mean for SEI's overall business strategy?
SEI's diversified business model allows it to capitalize on growth opportunities across different segments. The company is well positioned to leverage its strengths in asset management and technology to drive future growth.
Future outlook and CEO statements. Looking ahead, what is SEI's outlook for the future and what has the leadership communicated?
CEO Ryan Hicke emphasized SEI's commitment to sustained growth through strategic investments in talent, technology, and infrastructure. The addition of experienced directors to the board is expected to support SEI's growth strategies and enhance its capabilities in wealth management solutions.
How should investors view these statements?
Investors should see these statements as a positive indication of SEI's proactive approach to growth and innovation. The company's focus on strategic investments and board expertise positions it well for long-term success.
Key takeaways. In summary, SEI has delivered a strong performance in Q2 2025 with significant revenue and EPS growth. The company's strategic initiatives and investments in talent and technology are setting the stage for sustained growth. Thank you, John, for your insights.
Thank you for having me. SEI's performance this quarter is a testament to its strategic focus and operational excellence.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on SEI's performance in the comments below. Until next time,